Yeah, please, I request the audience to mute themselves. So, very good evening to everyone. I'm Mustafa Kazim, Associate Head, PGANC, and we are delighted to bring to you another informative session on financial wellness. So the topic for today's session is personal finance, basics of money management, and this would be taken by Mr. Aditya Ghosh from SOLEIL Services. He's based in New Delhi. So we know that people earn, but they don't know how to manage their finances. So this session would teach you the art of money management. So about the speaker, Mr. Aditya Ghosh is an engineer graduate with a master's degree from Bristol University, UK, and MBA from IMT Ghaziabad. He has his healthcare and financial services venture in the name of SOLEIL Services. After working for more than 15 years in international business, he works as a financial advisor and has helped many families plan for their wealth creation, child's higher education, retirement, health, term, and other financial goals in collaboration with Max and HDFC. So without any further ado, I'd like to hand over the virtual stage to Mr. Aditya. Over to you, sir.
Thank you, Mustafa. Thank you for the introductory speech, and I think you have made my job easier. So just to I'll take you through a presentation, but always remember that this is not part of your course. So it will be as much interactive as possible. I have tried to make this presentation as simple as possible, because if I would have added jargons, might be it wouldn't have attracted you, right? So I've made it simpler, and I need more participation, so that your queries, whatever queries it may be as abstract as possible, please do ask, so that your queries are being answered properly, right? So I'll not take much of your time to start with the presentation directly. Just if you can let me know whether you can see the screen, please. Can you see the screen, guys?
Yeah, it's visible.
Perfect.
Yeah.
So guys, thank you very much for your participation. And I will just by the way, I'm an IRDI and AMFI registered. So I will explain you what does IRDI and what is this. By the way, IRDI is an Insurance Regulatory Development Authority, which is the government body for insurance, and AMFI is for the mutual fund, Association of Mutual Fund India. So I'm a registered under both, right? So I'll explain you when I'm saying I'm registered under both, how does it mean, and what does this certify? I'll explain you later, right? So to start with, investment. So my main subject is investment, and I want participation, as I said, answers from you guys. Is car an investment, please? Buying a car is an investment?
No, but I don't think.
No.
It's a liability. It depends. It depends on how you're using it. Yeah.
Okay, how you're using it. Can you explain me when you're saying how you're using it, please? What do you exactly mean?
If you use it for business purpose, it can be.
No. Business purpose, you forget it. I'm talking personal investment.
Sir, it's a liability.
It's just liability.
Liability. Expensive clothes.
Same, sir, liability.
Liability. Gadgets.
Same, sir, liability.
Real estate.
Investment.
It is also a liability.
Assets, sir, actually. No, it depends.
Depends, sir.
So it depends.
Right. So now you're confused. So whether asset or a liability, it actually depends where exactly you are buying. Now, when you are saying asset or when you are saying liability, why you are saying that? Why is it liable? What is it? It is liable because at the end of the day, investment means an asset acquired or investment to build wealth. So when somebody is saying liability, he means to say, sir, when I'm buying this thing, it is not adding any value to my wealth, right?
Sir?
When I'm buying this property, it is not adding value to my wealth. That's why you are saying that, sir, it is a liable. Liability means what? Is a headache. It's something which is not adding value, or it is something which is not creating any further, wealth to my investment. So there the liability comes. When it is adding value actually to any of your whatever you buy, then it becomes an asset, right? So in investment, an asset acquired or investment into build wealth. In any of these first three of the things, anyway, it's a liability because it is not building any wealth for you. right? The fourth part, that is the real estate, it exactly depends where you are buying. Suppose people who are from Delhi NCR, people who had bought homes in Greater Noida at one moment of time, it was an asset, it was a investment. But if you buy after that, when this thing happened, when there were a lot of failures which happened, now it has become liability, because the same property you're getting it for half the price. So that time, if you would have bought for might be 1 CR, the same property they are ready to buy at 75 lakhs. That means at a 25 lakhs loss. So it is not creating wealth. But if you see somewhere else, suppose if you buy in Kanpur, I don't know, might be in Kolkata, might be in Hyderabad, might be it is creating wealth of 30% every year on year. So it exactly depends where and when you are buying it, right? When investment you are considering, the another part which comes into the mind, ki ROI kitna hai yaar? What is the ROI? What is the return on investment? That is the net profit by cost of investment into 100. Simple logic. So ROI is always in the terms of percentage what you are getting. ROI cannot be negative, right? ROI has to be positive in terms of investment. In financial instruments, when you consider, when I talk about investments, there are like savings, which our forefathers and fathers used to do, right? Fathers used to do in banks, mutual funds, insurances, shares, etc., debentures, etc. So in financial instrument, these are the types of instruments which are there, where we can talk about. Sorry. So these are the financial instruments which we talk when we talk about investments, are savings, mutual fund, insurances, shares, etc. Now, guys, see, this is a topic which I actually always try to focus on. Normally, when I talk to people who are at the age of 45 or 50 or 45 even, that life has been uncertain. When I mean to say uncertainty, it was uncertain during our forefathers' time, during our fathers' time. They have gone through tough times. I could remember famine and all these things, were part of in Indian history. In my time, I'll certainly explain you. In your time, there are uncertainties, and your future also there will be uncertainties. 1 month back, nobody thought that Russia will be attacking Ukraine, right? But it did, right? So it is an uncertainty in terms of global scenario. Now, in my life, I'm talking about not college. Like when I passed in 2001, when I finished my when I did my engineering in 2001, the first thing, uncertainty also, the predictability which we talk about. The first thing, the global uncertainty which I faced was Y2K. Y2K was something like, the computers and everything will not be available. It will be totally crap. So people lost their jobs, everything, and that was Y2K. People faced a lot during the time of 2000, 1999, 2000 to 2001. 2001, 9/11. It was a huge setback for all of us. All of us were given jobs in 2001. After 9/11, they said no. Even I don't want to name them, but certainly I'll tell you, because there were big companies, IT companies, who had to revoke, and they gave the offer almost after 1.5 years. So 1.5 years, people were sitting at home during the time of 9/11. People like me who were planning to go abroad had to shift our plan almost for 1.5 years, because people were not getting visas to go for masters to go to US. So I had to travel to UK, right? Third, 2008 to 11 crisis, financial crisis, which actually rocked the whole, the whole world, starting from big companies getting vanished away, like Lehman Brothers and so many other companies, right? And finally, which you and me and everyone faces, the coronavirus thing, right? Which nobody knew. In 2020, February, nobody knew that this thing was coming up. And for the next 2 years, the whole system has been into totally into trouble. When I'm talking about personal uncertainties, the things which people face is accident, medical emergency, fired. People get fired from the jobs. You never know. Might be, a company like better.com or something like that. The company, they fired 4,000 employees at one go, right? The employees didn't have any problem. The problem is the company didn't run. And certainly the death. See, why I'm talking about uncertainty is something like, you have to be prepared. Prepared, I'm not talking about the mental stability or mentally. Yes, mentally, people have to be prepared. But also the most important thing is the financial stability. People, I'm telling you, mental stability, people can sometimes cope up, sometimes, they don't. But if financially they are problem, it is very difficult for a person to cope up. I mean, to come back. So financially, you have to be very secure, right? So that's the reason I've got this uncertainty life topic into the presentation. Now, guys, when I'm talking about income, so let's come to the income part. Now, there are two types of income which we are talking about, right? Active income and passive income. Now, tell me the difference between, forget about the income part. Kim, can you give me one word for active and passive, please? Just a one word.
A regular income and regular
Sorry, ma'am.
it is like the income is to earn regularly.
Sir,
I can hear.
active is by yourself and passive by other means, sir.
Active is yourself. Yeah. Okay.
Active is like trading time for money.
Active is for?
Like trading time for money.
Okay.
Sir,
Passive is like creating money from money.
Creating money from money. No, forget about the income part. Suppose, if anything, if I say active participation or passive participation or active expense, passive expense, what do you mean by active?
active means, sir, I am directly involved, sir. Passive means I am not directly involved, but I am getting benefited out of it.
Perfect. So active means direct and passive means indirect. True? Now you add whatever income, you add whatever jargons beside that, it almost means direct or indirect, direct or indirect. Right? Now, active income, when we talk about active income, means the hourly wages, salaries, commissions. I think somebody said salaries. And passive income means money earned. I think somebody said from money. That is from interest, from dividends, from rental property, whatever is the passive income. Right? Now, I want to know how much time do we invest on active income and how much time do we invest on passive income? I don't want, you can tell your perspective. There might be some freshers who haven't worked or who haven't earned, but there must be somebody who has earned, or, as a general, just give me an idea, give me a value in terms of hours per year. Number of hours per year on active income and number of hours on passive income.
So generally 60 to 70% on active income, sir, and rest 30% on passive income, sir.
Okay, can you please give me an hour? Give me a value on hours. How much of time do we spend
Generally,
on
sir,
active
8
income?
hours per day, sir, multiplied by 5.
Give me a yearly income. Give me a yearly
1500 for active.
1500 hours.
1600.
Okay, I think 15, 16 to 2000 hours, right? Let us say 2000. Or might be 1600 hours. Somebody told me 1600 hours. Now, can you tell me how much time do people invest on passive, please?
Hardly 200 hours, sir.
Very good. 200. I've got one answer. I need two more answers, please.
Like hardly between 100 and 200 maybe.
Okay, perfect. 100 and 200
50
years
hours.
together. How many?
For
50,
passive
50.
income, so for passive income, we just need to make investments, right? We don't need to work in a company. We just invest.
How
in
much
stocks.
time do people invest?
Around 10 to 15 hours.
50,
Less than
60.
50.
15 hours, right? So I got 15 hours, I got 150 hours, I got 200 hours, right? Now the NJ Wealth with whom I work actually for mutual funds and which I use their platform. So they are one of the biggest distributors in mutual funds. So they did a survey, right? They did a survey among that how much people actually invest in passive income, right? And you'll be surprised to know that we invest around how much time do we, you said on active income? Around 1600 hours or 2000 hours. But on passive income, people hardly spend even 5 minutes of their whole time in a year. And that also I'm talking about, they spend during the time of saving taxes at the end of the year. When you have to go for taxes, you contact somebody, "Arey yaar, mera ye kaam kar dena." That is the only the time they said, actually 5 minutes they spend only per year for passive income. So this is the actual scenario of our healthcare, of our financial system in India. We don't invest much on our passive, right, income. Now, when I'm talking about investment objective, the first thing which which comes in mind is that why? What is that I want to achieve with my investment, right? So identifying the investment objective, number one is the financial need. How much money will I require? Is it for my children, for my pension, for my healthcare, for my family, or will I need to travel abroad, or will I need to have a wonderful vacation? financial need. How much money will I require for getting my financial needs, right? Second is timing. When? Now, after 5 years, after 10 years, after 20 years, or after 3 years. So that timing you have to have in mind. So how much money you require? What is the timing of the financial needs, right? When do you require it? This thing you have to have in mind. Third is the personal situation of the client. What is the available funds for investment? Somebody is earning 10 lakhs per year. Somebody is earning 1 crore per year. Somebody is earning 5 lakhs per year. Or somebody is earning even 3 lakhs per year. So how much money you can invest every year, that is upon is the personal situation. You have to decide, right? Depending upon your salary. And what is your ability to accept risk? How much volatile can I accept in my investment? That is also you have to take care while doing any type of investments. So these things you have to always keep in mind. One is the financial need, one is the timing, and one is your situation. How much fund you have. Only then only people like me or people like others can actually suggest you or do that or do whatever. If you don't have a clarity among all these needs, you won't be able to, it is not always that, you are earning, so you will save or you will do it. No, it is not always not the case. Believe me, I have seen, we have seen, not I, we have seen that a lot of, big people like actors or big people, they actually earn, but they don't know how to, save. They don't know how to invest, right? So, and at the end of the, we have seen that people like big actors getting bankrupt completely. So people, it is not that if you know how to earn, you will know how to invest. It is not the case, right? So younger people, we have seen that they are much more comfortable making investments in volatile instruments, but older people like who are in the age of 55 or something, they don't want to take risk. But I have also, it is my, this thing, look out, which I have found out, that people who are around 55, are also prone to take more risk. They say, Aditya, I've got 5 to 6 years of my, this thing, of my working life. Tell me something which will give me good returns by the time I retire. So I have seen those cases also, right? So it works in reverse. See, this is the life cycle planning. And, I'm sure the people who are there have already crossed or might be crossing this 22-year barrier, right? You're already on the first half barrier, right? So till now, I'm sure majority of the people had been dependent on a family. But now as you move ahead, the earning years till your retirement age, you'll be becoming more and more independent, right? So more independent means more responsibilities. Responsibilities, certainly you will get married, you have to take care of your, wife, or the wife has to take care of the husband, or whatever it may be, children, housing. Now both husband, wife, both they work equally, right? So all these things have to be, taken care by you only. Nobody will be, will be able to, help you on the earning years or the retirement. It is that you have yourself have to plan it, right? Child education, children, marriage. So whole this 38 years of your life, you have to plan it. And within this, certainly you have to travel abroad, you have to enjoy yourself every year. All these things are there. But the planning has to be done at your end during the earning years. And also you have to plan in such a way that you can take care of your retirement age, which I'm considering that people survive up till from 75 to 85, right? So if you live more, good, but you have to take care of yourself. Previously, the companies used to give pensions, but now even the governments do not give pensions except the army defense unit. Even the normal government jobs also, they don't have pensions, right? So we have to take care of that. Now, what we have seen, the biggest drivers of the investment has always been the taxation, which I said that people, when it is during the month of February, the HR will be after you, that please give me the, give me the proof of investment so that we can submit it, so that you can save taxes. And what you will do during that time, you'll be hogging around here and there, and you'll be finding it out what type of investment should I do so that I save taxes. Please don't do that like that, right? Please do invest not only to save taxes, but also so that you can multiply your money. So these are some of the tax planning, which ATC and all these things people actually do. ULIPs, NSC, PPF. PPF is is automatically they are going away. But these are the benefits which I'll explain you might be later on, or might be, I'm sure your, the finance people or, your HR people will explain you what are the types of taxations are there so that you can save. And the common reasons of saving, what we have seen is financial responsibility, emergency contingency. Suddenly somebody, requests money, so you have to save, for your emergency or contingency needs. Income tax savings, I've already told you. Wealth creation is one of the biggest drivers for saving. And buying assets. You want to buy a car, you want to buy a house, whatever you want to buy. But that is one of the reasons for saving. Now, what we have seen that, when you save, there are 3 different types. One is we call a SIP, that is the systematic plan method or systematic investment method planning. One is occasional, whenever money is available. Suddenly at the end of the year, you have got something bonus. You say, sir, I want to invest during that time. Fine, you invest. And the third category is certainly, which I told you, is during the time of income tax, to save income tax. Right. So best saving is a compulsive and systematic because of the compounding effect without causing pressure on budgets. Now, I'll be showing you a mutual fund calculator. I don't know how much of you people know about it, but which will help you to understand that how will it actually, multiply your money. Can you see the screen, guys? Oh, sorry.
Yes, sir.
Yes, sir.
Just Now tell me, suppose if you are joining a company, right? Now, what is the systematic investment plan which you want to do every month? Give me a value, please. Some of you, or all of you will be joining the corporate life.
That depends on our
40,000.
Give me a value. Give me a value.
10% of my income.
No. Give me a value.
40,000.
I want to show you that how does it multiply. So whatever you want to invest, you can give me a value, 10% or what, just give me a value.
So 5,000 per month.
5,000. Okay, let's take
My
it. 5,000.
calculator screen is not visible.
Sir, I think your calculator screen is not visible.
We are seeing still PPT only.
Yes, sir. Yes,
PPT.
sir. Yes, sir.
PPT only that.
PPT visible.
Just a minute.
I guess you need to unshare and then reshare with the whole.
Yeah. Can you see it now?
Yeah.
Yes, sir. Yes, sir.
Yes, sir.
Yes, we
Yeah. So somebody told me 5,000. Right? Somebody told me, sir, I want to save 5,000 of my money every month. Now, how much for how long you want to save? Can you tell me? For how long?
around 10 years. 10 years.
Around 10 years. Okay, perfect. So let's take it as 10 years. Now, I'm sorry. So after 10 years, this is the amount which you will be earning, 13,76,085. Certainly, there will be a 10% deduction on the tax. So 10% is coming out to be out of 1 lakh. That means 1 lakh will go around 1.3. So still you will be earning around 12.76. You will be earning around 13 lakhs. You'll be earning. So how much did you invest? Suppose if you do
6 lakh.
And how much passive income you have earned?
So almost double of it, like 30.
Almost double. So you have earned a passive income of almost 7 lakhs.
Sir, it's 15% guaranteed.
15% is not guaranteed, but if you invest at the right time, presently mutual fund, if you are talking, I'm talking about the mutual fund per se. If you're talking about savings in the bank, it will give you 4%.
Sorry, mutual funds, are you talking about index funds or active?
It can be any type of mutual fund. It can be any, but see, you have to always balance it. I'm not talking about index. I'm not going to the particular about any fund now. I'm just talking about generally on mutual fund. If you talk, that's why I want to talk general, because if I go to the jargons, might be many people won't understand that, right? I don't want to go for index fund. I don't want to go for focused fund or small cap, mid cap, large cap, nothing. I'm just talking about that if you balance it out and if you invest in a proper way, then you get a return of around 15%.
Okay,
I think
sir.
sir,
Right.
it is too high, na sir, 15%.
People have earned around 25 to 30%. In 2020, people who had invested in the month of April, if they have taken the money now, right? If they have taken the money now, no, not on now. I think February when they have taken the money, or I think March, you know how much percentage they have got returns? 120% return they have got. 120% within 1.5 years.
Sir, what is that fund?
But that also depends on the time that pandemic.
Exactly. It is depends on the time. But in SIP, if you see the funds, if you see the SBI mutual fund or any mid cap fund, if you see SBI mid cap fund, they are giving you a return of around 15%. Right. So for 10 years, you can expect around 15 to 20%. You can expect. I can show you. I can show you. I have got some funds which I will show it to you. Might be at the end of the session that how these funds are performing within 10 years or 15 years till now.
Sir, if you want to invest for just 1 year, so which one do you prefer?
See, 1 year is not a good time for investment, because 1 year it will not give you good returns.
At least better than savings interest, sir. It's in saving it is around 3%.
At least better than savings interest, but it also depends when you are buying it and when you are selling it. By chance, if it happens that you are investing in 2019 and 2020, suddenly the market went down, which the market went down actually due to COVID. So who expected? Will you expect that in 2020 such things, or 2023 such things won't happen? But in ideal situation, if you, so I'm giving an example, which you rightly said. So you invest in 2019. Now suddenly you plan to take the money out in 2020 July. Certainly you will not get any returns. You will get a negative return. But if you would have kept the money and taken the money in 2022 or 23, might be 22 now, you would have expected a return of around 60 to 70%. So my thing is, always when you invest or when you plan to take it out, you have to know when, you have to know the market situation very well.
Okay,
right?
Sir.
But considering SIP for a long term will give you around 15%, it will give you 100% guarantee. It will give you, considering the present market, Indian market, which is a very, very stable market, it will give you a return of 15%. Right. Another thing, I just, so 5,000 monthly, 15%, 10 years, 13,76,000. You will get it. But there will be 10% tax plus 0.4%. So which will come out to be around 12,80,000 something will get. Right. There is another
tax
thing.
Will only be on the interest amount?
Tax, actually what happens, suppose if you're investing, after 1 lakh. So that means 13,76,085 is the amount which you're running. Above 1 lakh, up to 1 lakh, there will be no taxes. That means 13,76,085 minus 1 lakh, that is 12,76,000. On that, there will be 10% tax and 0.4% cess. That means you take out around 120,000 you have to pay.
Okay, sir.
Okay. So 120,000 will be deducted from 13,76,000.
Then the mutual fund manager will also deduct some charges, sir.
Mutual fund managers will get what?
So they'll also deduct some percentage out of it.
Like expense ratio.
That will be 0.5 or 0.8%.
It's not a big.
Yes, sir.
It's not a big thing. It's not a big thing. 0.5% is hardly anything. That too, they are anyways handle your funds, because the fund manager will be there to plan your investments. So they will be charging that 0.5 to 1%. They will be charging.
So they'll be charging on the profit, or they'll be charging on the net amount that you are getting after it.
They'll be charging on the total amount. So supposedly, what you have invested 5,000, right? So whatever amount will get multiplied, no? So they will be charging on that. So 0.5 to 1% they normally charge the mutual fund companies. Right. So, and there is another rule, let me tell you, that is the 15-15 rule. That is, if you invest 15,000 for 15% at 15 years, you get an amount of around 1 CR. Certainly there will be a tax deduction and you will be getting around 90 lakhs.
So could you please repeat that once?
If you invest 15,000 and at the rate of 15%, which I can tell you we get it through, for a duration of 15 years, you get 1 CR. It is a normal calculator which I'm showing you. So there is a 15-15-15 rule in mutual funds, right? So I wanted to explain you this. That's why I showed you this calculating part. Now from SIP, if I want to tell you, suppose one-time investment, sir, I want to invest 1 lakh, right? At the end of the year, somebody got a 1 lakh bonus, or for suppose 5 lakh, 2 lakh bonus, 1 lakh you bought something, and rest 1 lakh you want to invest. Suppose for 5 years. Now that 5 years, that 1 lakh straight away it increases to 2 lakhs, right? So it doubled your money. So you have just kept the money, and after 5 years, it completely doubled your money to 2 lakhs at a rate of 15%. Have you understood, guys? Now you put as much value, your investment, whatever the maturity value will increase it, right? In some cases, I've seen that in small cap funds, if you keep it for 3 years, I've seen that there is a return of around 30%. Right. So it depends when you want the money and when you are investing. So that is very much important for you to this thing, right? So can I close this now?
Yes, sir, I have one question.
Tell me.
Sir, there are few companies with the expense ratio more than 1%. Is it wise to invest in those companies, consider a horizon of 10 years? Because even 0.1% will matter a lot.
Yes, but expense ratio means you are saying, see, the expense ratio, even is what they are saying about 1%. Which type of funds you're talking about? Just tell me, like.
Yes, sir. Like ICICI is taking 1.07%. So will that be good to invest for 10 years? Because
see how much they are taking or how much expense ratio. At the end of the day, you should be cared how much percentage return they are giving it to you. See, anybody, if they are taking 1%, see, your mind should not be that yaar, wo mujhse kitna le raha hai. Nahin. Your mind should be that how much return they are giving it to you, or that type of, because if they are charging high, it doesn't mean you have to also find out that how much the fund is doing well. Might be ICICI, whichever fund you're talking about, is giving good returns. You have to always find if it is giving you a good return, it is okay for you.
Yes,
right?
sir.
And don't go after the expense ratio. Don't go after the expense ratio. How much they are earning, whatever they are earning 0.8%, they are earning 1%. It will not add any value to. It will not, much differentiate much to your value. To be frank with you,
so
difference between 0.8 and 1%.
Just they often change their expense ratio from timely basis.
But they always inform you.
So is it done like after 3 months, or it depends on other criteria? They keep on changing.
It depends.
Okay, sir.
It depends. But my suggestion is always, don't go after the expense ratio, right? You have to always go for good funds. You have to always go for the NFOs which are coming into the market, new fund offers, right? And if the company is good, just check how much. Normally, I've seen that like Aditya Birla, ICICI, they are good funds. Their funds are always, I have invested and I've got good returns. Right now, Axis is giving good returns. Within Axis, there was a flexi fund. SBI mutual fund is one of the good, funding mutual fund company who's giving good returns. Right. Invesco.
So have you heard about Quant mutual fund? What is your views on that?
Which mutual fund, please?
Quant mutual fund, QUANT, which has been.
I haven't heard about
that. Or Parag Parikh.
Parag Parikh is okay. Parag Parikh, they are new. They are not being so old. Parag Parikh used to be they used to invest in shares first of all. Now they have started their own mutual fund company.
Okay, sir.
Right. So Parag Parikh is a good. I'm not saying that, but they are new into this mutual fund company. Right. Can I move now?
Sure, sir.
Sir, basically we can directly jump into the stock market now, rather than.
I will tell you later on.
Okay.
What you should do. Okay.
One more question.
Right. Tell me.
Sir, like I'm investing suppose 10,000 per month SIP mutual fund. So is it a good to invest in one SIP, or I should divide that money into some 4 or 5 mutual funds, like 1,000?
You should always remember one thing, all of you. Whenever you are investing, don't invest in one mutual fund. always try to, even if you are investing 5,000 rupees, or even actually minimum fund which you can invest is 500 rupees. So whenever you are investing in any like mutual funds, always distribute your money. Give some money in large cap, save money in mid cap, in flexi cap, small cap, like that. You distribute it accordingly. That is where I do with my clients.
Okay, sir. Very good.
Some
So that way we can save the 1 lakh, up to 1 lakh. You said there is a tax, so that way we can save the tax, right?
No,
Because
in mutual fund you cannot save taxes. Only you can save taxes if you're biting in ULIP, right? That then you can save taxes. That is which is a link to the insurance, but that gives a bond of 5 years, 5 to 10 years minimum. You have to keep the money, and and you have to invest for 5 to 10 years. In ULIP also you get good returns, same, almost same, but a little bit lesser actually. But you have to bond yourself that within 10 years or within 8 years you cannot take the money out, and
so
that
you
is a
said
tax free.
up to 1 lakh there will be no tax.
No. Up to 1 lakh there won't be any taxes. But supposedly now if you're investing, suppose 5 lakhs, right, which has come out to be 10 lakhs. So up to 6 lakhs, nothing else. You don't have to pay anything. From 6 lakhs to 10 lakhs, there you have to pay.
So, sir, if we
Sir, one
divide
ICICI one
Tell me.
so if we divide the money in different SIPs, so the amount
Whatever
will
you
be
do,
less.
but at the end of the day, it is mapped under your PAN card, no? So people will come to know. You invest in 10 different funds. But if you're, but see, they will find it out that how much is your, suppose in some funds you got loss, in some funds you got this thing, profit. So they will average it out.
So all of it will be count.
Yeah. PAN card. See, whenever they will put your PAN card, insert your PAN card, they will come to know that how much you are earning from all these funds.
Okay, so got it.
Right. And anyways, you will not take out all the funds at one go, no? Suppose after 5 years, it's not that all the funds you will take at one go. Might be you'll take some fund now, might be on later on. So whatever you do, they will calculate it. And within that financial year, whatever the amount you have taken out. Yeah, tell me.
Sir, one ICICI investment I have heard, sir. In that he was telling ki 2.5 lakhs per year for 5 years. If you pay, then it will be non-taxable, sir, after 10 years when you take out
100% if it is a ULIP fund or if it is ELSS, equity linked saving scheme or ULIP. Except those two funds.
Sir, it was that only, sir.
I told you, no? It can be ELSS or ULIP. Except two funds, in mutual fund, you cannot save taxes.
So it is right, sir, for 2.5 lakhs per year and for 5 years.
It is a huge amount. My friend.
Ultimately, you are fixing 12.5 lakhs, sir.
Exactly. Why will you do that? And ELSS, and you should do only to save taxes. Otherwise, you are free to invest in any amount, you can do it. If you are getting good returns, why will you just keep your money on ELSS and ULIP? Right. Can you move on?
Sir, you were telling about
Yes,
something about Invesco.
No. The Invesco is a different company. So they have also invested in, there are a lot of mutual fund companies who have come into the market, right? So almost there are, I think, 40 to 50 mutual fund companies which have started now. Some are very new, right? So I will let you know that which are the best mutual fund companies. So normally what I do is that I distribute, PDF file stating that which are the present funds, which are the NFOs, which you can invest and you'll get good returns. So that I will be letting you know.
Sir, is it right to invest in a company, sir, who is 2019 or 18, although it is giving good returns, sir, but 18, 19, sir?
If it is 2018, 19 or 20, it doesn't matter, because whichever company, right, whichever mutual fund company is coming into the market, they have to follow the protocols as per Association of Mutual Fund in India, and they have to, give the same guidelines. They have to follow the same guidelines what a 10-year-old or 20-year-old company is doing. So there is no harm, right? All are being administered by the government of India. Even if they are coming 2019, 20, it doesn't matter.
Sir,
you have to sit with them. You have to sit with them and understand that which are the, what type of fund they are doing, or, who is the fund manager might be, and what type of companies or what type of sectors they are doing. That is very much essential for you to understand.
Hi.
Just a minute. We are getting a very enthusiastic response. Thank you for that. But I'll
Can we take the questions at the end
yeah,
of the
at the
session?
end, that would be better because this way, this way it will
Otherwise, what will
never end.
happen? I will
Many are
miss out the whole.
yeah, many are requesting in the chat box also that they are for the session. So those who are having question, I'll request to please ask in the end. Yeah.
Please.
Yeah.
Yeah. So let me share this. So guys, can you see the screen now?
Sir.
Yes.
Yes, sir. Yes,
Yeah.
Okay. Now, normally what people do is that how do people invest? So normally they ask their relatives, colleagues, friends, neighbors, whoever, right? But normally, what we have seen that if my friend is saying, Aditya, I've invested in this, why don't you invest? But he invested last year. Now I'm asking, he's telling me to invest now. But will it be actual? Or the returns what he'll be getting, will I be getting that? No. So always what you should do, you should ask and have a mentor in front of you who is there in the market. It can be anyone, but who is already having a proper, you can say, certifications, and who can actually guide you in a proper way. Now, how do you find it out whether the mentor is, is actually he knows about the market or not, or whether he's registered on the IRD and AMFI? So what I've done, this is my, okay, now let me show you the IRDI one. Can you see the screen, guys?
Sir.
So Insurance Regulatory and Development Authority. So if you just insert my Aadhaar, this thing,
Showing
PAN
only
card.
the PPT. I think
It is
we have
showing
to-
only the PPT. Just a minute.
So while sharing, you can share the screen.
No, normally, actually, yeah. So I think I will do it. Yeah. So can you see it now?
Yes, sir.
Yes, sir.
So now, if you submit it, sorry, I have. So when you submit it, you will get all my details. So there are different, people will be saying, I'm this, I'm that, I'm in the market, I know. So you just tell him that, you're an IRDI person. Can you give me your PAN card? You yourself can go there and you can check it that whether he is registered under IRDI or not. Okay. Similarly, just a minute. Similarly, for AMFI also. So for AMFI also, it is the same thing. My AMFI registration code is 189276. Ask the mentors that whoever you are asking for the financial, so just ask them and you will get the whole details over here. So AMFI and this IRD are the register, are the government of India, this thing under government of India. So whether you know that whether I'm part of it or not, you can get it by giving my details or anybody's details, right? So when you get through any mentor, guys, please ask them their credentials. It is very much essential for you, right? Now, in mutual fund, can you see the screen? There are different types of funds like large cap, mid cap, and small cap. So whoever buys mutual fund is always dependent on this type of funds. So either they invest in large cap, mid cap, even mixture of mid cap and large cap, or small cap. So what do you mean by large cap? Which has got a market capitalization of 20,000 crore. Mid cap is between 5,000 and 20,000, and small cap is below 5,000. Okay. Now, when you buy any insurance, the first thing you should ask is the claim settlement ratio. That is very much important, and you can get it on the website. You don't have to ask anyone. Just go there in the website and see what is the claim settlement ratio of any particular insurance which you are buying. So these are the funds. In large cap, 80% of the fund has to be on large cap. Then there are sector, ELSS, which my friend was just now telling me on this thing, multi-cap fund, which is a good return, large and mid-cap, small cap, flexi-cap, dividend yield, contra, focus funds, right? So these are the different types of funds which are available in the market. Now, in insurance, I am linked with these three, that is Niva Bupa, which was known as Max Bupa, Max Life, HDFC. In mutual fund, I am linked with NJ Wealth. So NJ Wealth is one of the largest distributors, right? they, last, I think in 2019-20, they were having an earning of around 777 crores. You can go into the website or any link and you can check about NJ Wealth. NJ Wealth has got offices everywhere almost. I think they've got 30, 40 or 50 offices in India, and they are very dynamic in the mutual fund businesses. So guys, this is a small presentation right at my end, and I'm ready to take any questions now. And please put on your video so that I can see. Yeah.
Yeah, just to start off, I have a small question. Like cryptocurrency is a buzzing word. So your thoughts on that? Cryptocurrency. So is it safe to invest in that? And brief thought, your thought on that.
The problem is the crypto. We have been, it's a buzzing word. The problem is that there is no regulatory under, body, no government regulatory body which is actually advising us that whether to invest on cryptocurrency or not. Only what government has said that any type of income on digital currency, you have to pay 30% tax, right?
Yeah.
But there is nothing on cryptocurrency. So crypto is a total, I will not say false till now, but we don't know.
Okay.
See, another thing which I find it out is that when you are buying mutual fund, you know that this money is going into the stocks, right? And the stocks, suppose it is going on 100 companies. So when these companies perform, right, and the shares market change, the mutual fund changes. So there is a linkage between the companies and the mutual funds. In cryptocurrency, unfortunately, I'm a bit novice in this. I really don't know how the valuation changes. Is it like people only buying and selling, but in what basis? Is the cryptocurrency being used in any type of funds? That's why they are changing. I don't know. So till now, guys, there is no purpose of investing in any cryptocurrency. Once the government comes with something, a feasible, thing, and then we can all go.
Thank you. Thank you.
Yeah.
Sir, what is your opinion on sovereign gold bond?
See, sovereign gold bond. My suggestion is, anyways, gold is something which, government is also trying to move away hands from, right? Because gold is all, that depends on the oil prices. So gold, I have faced a big loss. I invested 4-5 lakhs, and when I got it, I got 4,50,000 when I, so gold is not something which I will recover, even if it is a sovereign gold bond.
Sir, I did not understand your statement that
better,
it's
sir,
related
mutual
to
fund
oil.
or share?
That thing I did not understand. So what do you mean by it's related to oil?
See, normally what we have seen, the oil and this thing, oil is the biggest importer, right? I mean, any country is the biggest importer, like even in India, the biggest import is oil. So sometimes what happens is the countries who try to sell their gold and try to get currency so that they can buy oil, right? So what we have seen that the oil prices and this, the gold are almost inversely proportional.
Okay.
Sir, SGP has a tenure period of 8 years. So even after 8 years, you faced loss?
Where?
In SGB, sovereign gold bonds.
See, gold bonds, again, I'm telling you, gold is something which depends. What is exactly happened on that situation is very difficult to say. Sovereign gold bond, like India, you can buy. For Indian market is fine. You can buy it because anyways, India is a very stable country, unlike other economies. So you can buy for it, but you have to see how much return they are giving in sovereign gold bond. I think they are giving around 7 to 8%, if I'm not wrong. How much is sovereign gold bond giving?
It's around 7 to 8%.
7 to 8%.
And they are giving in 6 months, they'll give around 2.5%.
No, 2%, that is you're talking about per year, right?
Yes, per year.
Yearly 2 point. Yeah. So what I'm saying, so 6 to 7%, why will you stick your money in sovereign gold bond?
Because after 8 years, I think the gold money, it will go up within 8 years. That is a good horizon.
8 years, I'm telling you 7%, but if you can earn 15 to 18%, then why will you invest in gold bond? See, normally people, gold bonds and everything, people who actually do it, people, who are NRIs, normally they invest in gold bonds, sovereign gold bonds. But when you are Indian, when you know that the country is doing very well, economy is doing very well, right? There are a lot of investments which are happening in manufacturing and other sectors. Why to invest?
Okay, sir.
Excuse me, sir. I have
Sir,
a
please
question.
may I know which is better, sir, mutual fund or share market? Sir? Which
Yeah,
is
yeah,
better
please,
to
I'll
invest?
stop you there. Please raise hand, and like Indranil was asking one question, and then Rajiv will go, and please raise your hand if you have any question like this way. Please, Indranil, please go ahead, and then Rajiv, I'll take your question.
Yeah. Sir, like at the initial time you told like people who invested at the time of starting of the lockdown, they earned around 120% of the interest. Is it possible if you invest only in mutual fund? No, right? Because mutual fund do not have that much of capability to giving you that much of interest. So is it good to split the money between mutual fund and stock?
See, stocks, I think you were asking me, sir, can we invest in stocks or not just now? No, somebody else.
No, like you told, like in the time.
No,
if
okay,
you
I'll tell
invest
you
in
the stocks. Now, as you told me on the mutual fund part, let me tell you on the stocks part. See, mutual fund, insurance, savings, these are okay. The stocks, the main problem is shares market, is that you have to be in the shares market.
Yeah.
Right. You cannot do it virtually. Mutual fund, what happens that somebody fund manager is actually, they are checking the stocks, right? And they are manipulating it and they are doing it. In share market, you have to be there in the market. You have to be there on Monday. You have to invest on Friday. You have to plan out and you have to exit. Again, you start on Monday. Again, you move on Friday. That is the way share market happens in the nil. You cannot think that, okay, I will invest on Monday and I will not check. Those who are actually in the share market, no, they give everything. They are always 8 hours a day. They are already there in the share market. So do you have that time? Or do I have that time? No. As I told you, for passive income, we hardly spend 5 minutes of our time in a whole year. If we would have invested, if you have time, man, you should always go for shares market. If you can invest around, forget about 8 hours a day. If you invest around 1 hour a day also and try to check that how the thing is happening, you should invest. But whether you have that time or not, that you have to ask yourself.
But sir, can we not do like that? Suppose we pick a good mutual fund company and we can see the stocks that mutual fund actually invested. So you can pick up the stocks from there, and you can.
No, you can do. See, anyway, see, my suggestion is now when you are buying a stock, see, if you are buying a blue chip company like Tata's, Reliance, it will give you returns, but at a very slow pace. Now, what I can understand about your share market is that you want to earn from a big amount from share market, right? So that you can get good returns. In that, suppose if somebody says that this time healthcare is very good, or there's a company who is coming into a medicine, which will actually help COVID. Forget about COVID. COVID is anyway going away, which will help in a big time, supposedly in some other diseases, So you have to be there in the market. You have to, read the newspaper very well. You have to understand the, the situation. You have to understand the field very much. Whichever field you are earning, whether medical or educational, you have to understand you have to read the Economic Times very well, and then you go into the share market. And then you invest. So share market is something you have to do your proper
research
background. You have to have a proper knowledge before getting into the share market.
Yeah.
And unfortunately, you people like you won't have time. I'm telling you. If you have time, you do it.
Yeah, sure, sir.
It's a good thing. Yeah.
Sir, if we spend
Please,
8 hours on share.
hello, excuse me. Please, it's my turn actually. Can you ask after me? Okay, sorry. Sir, I wanted to ask sir that I am investing in share markets and both mutual funds from 2 years, sir. I previously used to do job. So while that doing job, I started to invest both in mutual funds and share markets. So currently, actually, I just divided my whatever income that I'm getting, divided into some percentage. Like for expenditures, I allocated some 40%. Expenditures, whatever fees, clothes, and healthcare, whatever it may be. Then second 24% I have given to long-term investments. Long-term investment consists two parts: mutual funds also. In that mutual fund, small cap, mid cap, large cap, and flexi cap. And
Just guys,
stocks accumulation.
Just hold for a second. Just hold for a second. Just one.
Yeah.
So meanwhile, I'll request the participants to, like, attendees to raise hands and check in the like participant box and
Yeah,
go
please
as
tell
per
me.
your sequence. Rajiv, then
Yeah,
Vivek,
please.
Rahul. Yeah.
Yeah, sir, what I said that whatever income I'm getting, I'm splitting into various percentages. Like I said,
Yeah,
one
tell
is
me.
expenditure part that you would be say 40% are allocated. The second part is long-term account. Now, long-term account consists of two things. This mutual funds and stocks accumulation also. In mutual funds also, there will be diversification, small cap, mid cap, large cap, and flexi cap. And this is around 24%. This money, sir, at all costs, sir, at the at all cost, I will keep it at least 10 years, sir. I won't touch it actually. So that's why I'm allocating very less percent, just 24%. And there is the next remaining some 46% are there, no. So in that, sir, I'm just keeping some 60 to 80,000 for positional trading, sir, because I get some time, sir, to analyze the companies and use technical analysis to generate some small term returns to get, say, buy earphones and whatever basic needs
Right.
we had, and emergency funds, sir. Like parallelly, this whatever short term money I'm going to use, like some 60 to 80,000 only, I'm going to fix it, and I'm going to roll it over again and again, same amount, and whatever remaining amount I'm getting, that I will keep on accumulating in my saving accounts. Like say you said, no, emergency and all these things come. So I should have, I should be ready for that, for such uncertainty. So can you just tell me that whether this plan is all right, sir? Like, you
See,
can't
this
say
plan is all
100%.
right, but I need to understand, one more thing. I think, often people actually ask me, sir, how much should I invest? Or what should be the percentage of my income which people actually, I should invest. So guys, I must tell you, all of you, that whatever your gross salary is, right? Suppose if you're earning 5 lakhs, 10 lakhs, 20 lakhs, whatever amount, 30% of the amount should be kept into investments. 30% of the amount. So if you're earning 20 lakhs per year, 6 lakhs should be kept separately. You do whatever you want. You go, you party around. Now, what you said, Rajiv, is that you want to distribute that way. Might be what I'll do, that I have to listen to you very carefully. I have to need your, I have to understand your needs also, right? I have to understand your personal need, that, you told me that, sir, I require, I have to understand when do you require these funds, right? So I will try to find it out. Maybe I'll talk to you on a personal basis, and I will try to understand, because within this, within this thing, it will be very difficult for me to give you a solution.
Yes, sir. Actually, yeah, that's why I didn't tell you in terms of amount. I just told you in terms of percentages. Like
no, even if a percentage, even if in terms of needs also. Now you told me, sir, in 10 years I want to lock it. So 10 years you want to lock it for what? You have got a plan in your head, no?
Yes,
so you don't have to tell me anything now. Might be on a person to person basis once you speak, no? Then you tell me that, sir, I require this fund for this day, this require for this thing, so that I can assist you in a proper.
Sir, can I ask you on this mail, sir? Can I mail you regarding this?
Yeah, you may. Acha, by the way, I think I forgot to tell you, because there are a lot of people who are exiting. Mustafa, you can do one thing. See, I am actually, as I told you, I am with this thing, NJ Wealth. For NJ Wealth, you have to open a Demat account, right? So, just a minute, I think forgot. So this is the way you can, get into the NJ Wealth Demat account. You can take a screenshot, or you can take a photograph, and you can do it. Right. So this is the process of enrollment. You have to do p.njw.bz 15007 is my code, and you can see my name there. And these are the PAN copy, Aadhaar copy must be linked to your mobile number must be linked to your Aadhaar, and check copy, and all these things you must have to open the Demat account. Once NJ Wealth, approves your account, you can do online this thing. Whatever you want to buy or sell, you can do it online. If you want, I can show it to you also, or if you don't, we can do it later.
Yeah, I'll share this slide to the after
share this slide,
in
take
a
a
mail.
picture and share this slide.
I'll mail them.
Yeah, mail them, and they can open a Demat account. See, approval or whatever is not in my hands, right? It is something which NJ Wealth and Government of India, they do it. So it is not within my.
Sir,
Sir, if I have
one more thing, that now there are some ready-made model portfolios which have been say offered, like there is yadnyainvestment.com. Actually, these people are also SEBI registered
Which
people.
one? Which company?
Yadnyainvestment.com.
No, you must see. I'm telling you, don't have to go after NJ Wealth. See, there is Zerodha also is there. Then this thing is anyway.
Actually, these are model portfolios. Like we have mutual fund manager. What he does actually, he has a portfolio, right? Similarly, people who don't want to invest in mutual fund, but they want some stock exposure, but they don't have time or knowledge. So they outsource their work actually to some professional people. They design some portfolios, which consist of stocks only, so that you can copy that portfolio according to your whatever you money have, and you allocate that money to stocks directly. Like some people have decided to invest in stocks. So have you come across it, sir? Is it a better idea, sir?
I have to go through it, man. But see, the companies like I know Zerodha and all these companies, they're also doing the same thing. But at the end of the day, what happens is that I don't know whether you will get a mentor or somebody who will guide you, right? So that you have to find it out. So, but according to me, like if somebody, somebody requires my assistance, I cannot go to Zerodha because I'm already linked with NJ Wealth, right? But otherwise, there are 3-4 people in the market. Whoever, you can go any of them. It is not necessary that you have to come to this or go to me or go to anyone. Whoever gives you a better, this thing, not better. I mean, wherever you are comfortable, you can go for. No issues.
Yeah, I think we can take a few more questions. Like Vivek, please go ahead. Vivek Kumar.
Yes, sir. Hi, sir. I have a small doubt basically about please tell about occasional investment rather than SIP, because we don't have a fixed income or a monthly income. So please tell about more. Yes.
So you want to go for a yearly income, right? You want to go for a yearly investment you're talking about.
Yearly or occasional, it may be a.
You can go for occasional.
Yes,
even if you invest occasional, people actually who are businessmen, they want to invest occasional, right? Because people who are actually salaried, it is better for them to pay monthly, right? People who are doing businessmen, people who are having their own businesses, they will always have a lump sum money. Whenever they have lump sum, they invest. So it depends. Normally, I tell SIP always to you people because you are already, most of you people will be joining a company, right? But I'm sure some of you will be joining your own, will be having your own entrepreneur, or, shape, or maybe will be joining your own family business or whatever. So it depends completely upon an individual to individual. And as I said, you have to understand, your financial need, right? So whenever you have money, you can invest.
But I think SIP is better than occasional.
SIP is better for people who has got a monthly income, right?
Yes, correct.
Now, people who have got, supposedly, if suddenly some money, business person, somebody has got a money, he cannot talk about monthly income. No, so you can go for this thing. You can go for. It is not like SIP better or yearly better. It always depends when you want to invest and when you have the fund to invest.
Okay, sir. Yes, sir. I have another question because, sir, according to section 80C, income deduction, tax deduction. Sorry,
tax deduction.
Yes. So 80C, so like the farmer also come into that slab, So if farmer invested on that particular like a stock market or mutual fund, then they can also save the tax,
My friend, this is something same thing. I will not. This is something you have to talk to a CA. So farmer, you are saying farmer income if they invest in the mutual fund, right?
Yes, mutual fund or stock market or something else.
See, that you have to ask the CA. But if you tell me one thing, why there is a tax deduction to the farmer? Because the farmer is earning from his farms.
Yes, correct.
If you use that money and try to, might be do something else, right? So that is something you're talking about other investment, capital investment you can talk about or whatever. So why will government try to give you levy on that?
Right.
That is my understanding. That why will government give you, will give you benefit on that? Right. For your farmer's income is only for farmer income. Whatever you're earning by selling your, crops, that benefit will not get by doing
Yes,
something else.
yes. Okay. Thank you, sir.
Good evening, sir.
Hi, Rahul.
Sir, between mutual fund and their equivalent ETFs, which one is better and why?
Which one?
Mutual fund and equivalent ETF, like there are ETFs mimicking the same stocks, exchange traded funds.
Exchange traded funds, no?
And there are equivalent of the same mutual fund. Like in mutual fund also we have index fund and something like that, and we also have ETFs mimicking the same things. So
is always go for mutual funds, because exchange traded funds, I don't know how many fund companies are there in exchange traded funds, right? So my suggestion is always go see exchange traded funds. I don't know what type of funds they are investing in, which type of companies they are investing. So
like
I have to
the
know
same,
about that.
same,
But
same
otherwise,
Nifty 50
see,
or
normally
next
people
50. Nifty 50, next index
okay,
50, Nifty
and
100.
I have to find the difference. I have to know a little bit about that exchange traded funds, but I haven't seen people investing much on the ETFs. Have you invested on ETFs actually?
Yes, I did. I did. So,
okay.
But I was like, the value is like fluctuating throughout the day. So I thought that mutual fund is better because for me, because I was like I should go for the least price in a day. So,
but actually, if you ask me frankly, as far as my knowledge is concerned, ETF is normally done for a short term rather than for a long term, if I'm not wrong.
Actually, I was confused only because they like underlying stocks are same, and in fact, some mutual fund company like they are investing they have a fund and they are investing in their ETF only. That the fund which they are operating.
Can you give me an idea? Maybe I'll talk to you later and find it out which type of fund companies
one fund company I'm sure of doing this is Mirai Asset. They are doing they are like operating a fund, and they are investing the money we are investing in fund. They are investing that money into their ETF fund.
See, my suggestion, I'll tell you, Rahul, is always whenever you invest, try to always look for funds which are investing on mid cap and large cap. I have explained, large cap, mid cap, small cap. Always try to look for funds which have got majority of large cap and mid cap. Small cap, if you are looking for something, for easy or something quick returns, is fine.
Yes,
but if you need to work on that. Otherwise, ETF or whatever, whichever you say, you can invest on it, but you have to find it out in which type of funds they're investing, right? That is very much necessary. Majority should be mid cap, large cap is okay, small cap should be minimum.
Also, sir, one more question, like what are your thoughts about the sectoral fund, like IT based fund, infrastructure based fund, or consumer based?
I have seen people getting losing money in sector funds.
Okay.
Suddenly healthcare has gone up, and then after then suddenly you will find that the hospital shares have gone down. So sector fund it's something is very difficult to say, man. If you have got excess money, invest on sector funds. Otherwise,
actually I was interested in kind of IT based companies. So
IT based companies, see, will never actually, it depends, man. It completely depends. Suddenly you will see that the what is that, the dollar and rupee actually appreciated very much, and suddenly the exports have gone a little bit less, and you will find that that variation in the stock market of IT companies. So that's my thing, is that sector should be done at the last. I always tell people to invest in sector funds at the last. First, you try to invest in mid cap, large cap, and all this.
Okay, thank you very much, sir. That's all.
Yeah, Harsh, please go ahead. I think you are muted. Harsh, please unmute yourself and please go ahead and ask your question. We are falling short of time. Just one or two more questions you can take up. Harsh, I think we'll take Priyanshu's question. Harsh, you can type in the chat box. You are not audible to us.
Am I audible now?
Yeah. Please go ahead.
Okay. So, sir, my question was actually my objective actually is to get invested in some kind of real estate after 5 years from now, and I will be starting from investing from just after now. I'm just turning 22. So, what all combination should I invest at the start, and the factors which I look at while I will be seeing some real estate for better investment?
Real estate, you should not, first of all, whenever you're buying a first real estate, or whatever first house, you should always try to see that you want to live in that house, right? Don't buy a real estate just for the sake of investments, at least at your age, right? Might be when you are at the end of, maybe when you are earning around 35 or 30, 35 or 40, then you look for the second investment, which a second property, which you can look for investment. The first house you should always buy where you want to live, and second house for investment, right? So this to you, right? And if you're talking about, okay, I want to buy 2-3 houses so that I can give it for rent and all these things, but you have to know that where you are buying. Suppose in places like I should not say, but in some places like Kolkata, whatever, Eastern Zone, it is very difficult to buy properties because you never know, you give to a rental or some problem happens and your house is lost. But in otherwise, if you see in Mumbai and some other places, people, there is a proper rental agreement and proper thing going on. So first you buy your house for your, for your own self, and then you can look for investment.
And also, sir, your thoughts, wanted to know your thoughts on REIT.
REIT, see, REIT is already this thing. You're talking about the new laws which have come, no? As per the
I mean, a share in the real estate.
Share in the real estate, the new things which have come up, laws which have come up. The thing is that real estate shares, my thing is to avoid now, rather than directly investing in the real estate thing. Because there's a lot of things are being changed in the real estate thing. As I said, laws, because I know that there are new laws which are coming up, right? People, what they used to do, the real estate companies, they used to start with the property, even without finishing that, they used to start with the second property, right? Like that, a lot of people have faced a lot of issues for the past so many years, right? So we are waiting for the new laws in REIT to come. Once that is done, then you can buy in the shares market for real estate. But it will take time. It will take at least 4 to 5 years, I'm sure. But it will be structured. The REIT thing will be structured very soon.
Yep, Priyanshu, you can ask your question. Just a quick question from Priyanshu. I can, then we can end this session. It's quite still. If you want any, you have any detailed questions, then you can talk to sir in person or mail to him. I'll request you also to send your mail ID in the chat box. Some students were asking for that.
Just small question. Good evening, sir. Sir, I have
good evening.
Two scenarios and wants to know which one is better. Like there are two persons which start investing from 2017, and first person is doing SIP from 2017 to the next 10 years, and one person is have some financial knowledge and he understands the market. Like in 2019, he looks that the market goes down and he takes money from the SIP and do it in lump sum investment in the mutual funds. And also, like recently the Ukraine and Russia war, the market goes very down. And then at this type of scenarios, he takes money from his SIP and do it in lump sum investment. So which person gets more returns after next 10 years?
Very difficult, man. Very difficult. Very difficult. You have to know the situation. Like I cannot tell you right now, that even if you tell me, sir, I want to take SIP now and I want to invest it, it will be very difficult, to be frank, right? So I must, as I told you, I must know that, see, I have to know your needs, right? So suppose if you are taking out your SIP and trying to invest in a one go, why will you do that? Because anyway, you are investing SIP for a return of after 10 years, you are expecting that there will be a 15% return. So why will you take that money, pay the tax, 10%, and then again invest in something, something fund, put again the whole money into some other fund? Rather, I'll tell you, let the SIP go the way it is going. And if you want to invest in something, amount, why to take from the SIP? Invest in from your own income only, no? Don't try to disturb the SIP. That is my take. That is my recommendation to you. And don't play with the funds. What I'm trying to say is that whatever your goals are, that has to be set. So suppose if you're saying, sir, I require the fund after 5 years, right? Or might be I require the fund after 10 years. So those things have to be set, right? Suddenly, if something happens, now suddenly if I say that, if I find it out that you need money, due to some contingency, then we can find it out that which fund has to be taken out. But otherwise, for the sake of taking out, don't do that. What people actually do, they invest for 10 years or 5 years or whatever. Suddenly they need money for some emergency, for some, exigency purposes, like, right, urgent needs. Then they tell me, sir, which fund to break. But they will never ever break, because, you will, at the end of the day, you will find that there is not much of a difference. Because person who has been investing for 10 years, of whatever, investing for 8 years, you will see the returns are very good actually.
But that time, like this time recently, the Russia-Ukraine war and that pandemic, this time is very, very good time for lump sum investment, right?
This time is very good for any fund, even for lump sum also, even for SIP also. See, if you have fund, again, I'm telling you guys, I think the same question I was telling him. If you have fund now, put a lump sum fund. But if you are working somewhere, then there is no other thing for SIP. SIP is for people who have, a regular income, who are salaried. People who are business person, or people who have something, are working, or might be their entrepreneur, is always, they can invest on a one lump sum amount.
Yeah,
Okay. Sir, can you
thank you, sir.
I have
can
one.
you tell me why this is a good time to invest?
Very good time. Very, very good time to invest.
Yeah, I have one.
People are investing. LIC is getting private very soon. This LIC, I think 5% or 10% of the shares will go into the market. So everybody is looking forward to buying. SBI mutual fund we have bought. I have bought myself, which will give a very good return. This is the best time to buy now.
So I bought one ULIP. This is a personal question of mine. Like I bought one ULIP. I like cleared the 5 years locking period. So it can extend up to 10 years. So should I keep it or should I withdraw it?
How much rate has it given you?
It has given me, like, through all the falls of the corona, still it has managed to give me 15%. So I was thinking of like withdrawing it and then investing in some real estate. So what would be your thought on that?
Real estate?
Like to buy something, some land or
that you can do. If you really need to buy a house now, you can do it. But is it necessary to buy a house now?
No, not really. But I was just thinking whether to leave it there, because it has survived the falls of corona also, like, quite well. And one more thing, like, when I was doing that ULIP, the manager committed that it cannot fall below the premium amount, but it did fall during the corona time. But
no, ULIP is something like shares. Only thing is that is linked to the insurance. That means, I'll explain you. Insurance means if anything happens to you, right, then automatically your family will get the amount. So that is the only difference.
Yeah. So, like,
by the way,
when someone is committing, like, the thing is, like, read the offer document carefully. That should be on my part. But he committed by soul that it will never get
offer
below
document
that
very
premium.
carefully. It is bound to everything, right?
Yeah.
So that thing you will see. Even if you go to, I'm in healthcare. So when people go to the hospital, they have to sign the document, right? Bond. So that doesn't mean that nothing will happen.
Never
to
read
him.
it. 5-6 pages in. Got so much time. Yeah. Okay. Got it.
Nothing. It's not like, right?
Yeah. One last question from Savik we can take, and then we'll close this session. And yeah, Savik, just go ahead. You were waiting for a long time. That's why I'm. Yeah. Please go ahead, Savik.
Thank you, sir. Like, if I want to know more about this mutual funds and SIPs and all, and there are many more terms I've heard, that IPOs and NFOs. So if I want to know more, to learn slowly, how can I learn? From where can
Google. Google it. NFO, okay, I'll just give you an idea. IPO is normally for the shares market. NFO is for the mutual fund market. So whenever IPO is something like a new companies which coming into the market, right? They do IPO. NFO is that a new mutual fund, not company, but new mutual fund offer is coming. New mutual fund scheme is coming. Then we say as NFOs. This is the only difference. And if you want to know new NFOs or whatever, you want to invest yourself. Normally, my clients, I certainly tell them that these are the NFOs which are there in the market and you should invest. And anyways, if you Google it also, you'll find it out. You will get it.
Like, is there a place from where I can get to know that which are the good NFOs and how, like, Which are the ones?
See, good NFOs, there is nothing like good NFOs. People actually, see, normally if SBI, ICICI, Aditya Birla, they come with NFOs, people will buy. And if they given funds like multi-cap fund or flexi fund, they will buy. Right? Because they know that there will be a good return in multi-cap or a flexi cap. So by reading it or something, it is very difficult for you to understand that. My suggestion is a long-term thing, right? So it is not a one term that I will explain you and I will understand the whole thing. It will not be like that.
Okay, sir. With this, I think we'll close the session.
Okay.
Akash, please thank the speaker.
Okay. Thank you everyone for attending this session, and a special thanks to Aditya sir for giving his time and making it a very interactive session. I hope like it is very useful for the final year students precisely. And I also like to make a caution note that any suggestions specific to any funds is just for educational purpose. Please do your own due diligence after this, and we hope that all of us get invested in the market soon. And yeah, thank you everyone, and we would like to close this session. Thanks.
Yeah, I will also like
Thanks
to
a
thank
lot.
Aditya
Thanks
sir.
a lot, guys. I
Yeah.
mean, I think the amount of questions which I have answered, I haven't done till now. I mean, I attended, attended so many sessions, but it's good that people of you are, are aware of this type of, things which are happening in the market. So please invest carefully, and anytime, anything you need my help, you're most welcome.
Yeah, I will be sharing this recording, and I'll thank the speaker again, and thank you all for joining in. Thank you. We'll close.
Thank you,
Thank
everyone.
Thank you.
Thank you.
Thank you, sir.
Thank you, sir.